You're looking now at the standing ovation right after he made the announcement that went on for quite some time. The board unanimously voted in favor of Buffett's suggestion yesterday. He will still be the chairman after he steps down as CEO at the end of this year. As you can imagine, many across the investing world offering their praise for his iconic career, including Pershing Square's Bill Ackman.
Buffett's been one of my most important heroes, certainly in business, and I would say in life. I wouldn't bet against Berkshire.
Well, joining us now from more is Smead Capital Management CEO Cole Smead. His Smead Value Fund owns Berkshire stock. And Barbara Goodstein of R360, an investing community that had roughly 25% of its members at the annual meeting. Barbara, welcome. So they were in this room when this announcement was made.
They were, and they were just thrilled with the whole meeting. I was told that it was like a combination of a classroom and a Bruce Springsteen concert. The room was electric, and the ovation was described as spine-tingling.
And these are people who have been investing with Buffett and following him for a very, very long time. So what do they think now about this transition and about the company post his leadership and involvement, which may be technically not right now, but is coming?
Well, they're not only investing with him, they're all learning from him. We had a member that flew in literally from Taiwan because he follows him and he wants to continue learning, and he runs the highest performing hedge fund in Asia.
Wow.
So they're literally following him and looking at his examples, and they're just emulating what he's done and what he will continue to do.
Cole, what I appreciate about Berkshire and Buffett is that what they're doing is accessible to anyone. They're not using sophisticated options, and I mean, not that they don't use options, but it's basically a buy and hold strategy of minimal diversification and being opportunistic with the right price and the right time. But when they bought Apple in whatever year that was, I mean, anybody out there could have done the same thing, and a lot of people didn't. They haven't had all successes. Obviously, there was IBM at the time, which is why people were a little bit concerned about their kind of stock picking prowess in the tech world. But anyone can copy what he's done. They haven't managed to do so quite as successfully.
Yeah, to your point, Kelly, as Buffett said often, you don't need that high of an IQ to be a great investor. It needs to be at a certain level, but the smarter you are, there's an inverse relationship to your investment success. So two things that really stood out to me at the meeting. First off, this is not like a meeting in the 1990s or even in the early 2000s where Buffett, the quality of the audience has been diluted over the years because it's a lot more people looking for life advice, which Buffett gave out great life advice. It just wasn't as much a true investor community like the Ackmans of the world, like you mentioned. Two questions that really stood out to me. Buffett talked about what we just saw in the markets was not that big of a deal. And, based on what we can see in retail investors and what we're seeing in markets, it was a big deal to most people. And he said, if you think 15%, going down 15% is that big of a worry, you need to change your investment philosophy. There's a lot of people that need to do that. The second thing, and this is an open question, I think this is maybe the question of the next 5 years, is Buffett said a great business is one that needs no capital. And on the idea of the AI CapEx spend, he kind of got to that question, and he left it as an open question of whether that spend is going to be valuable. I only say it because that's very contentious in the S&P 500 today. That would ruin the S&P returns if Buffett is right that it's a question, because market participants are treating it like it's a certainty.